Good morning, everybody. Thanks for joining us today for this previously unscheduled webinar. So we're very pleased that you were able to take the time to join us to talk about the second stimulus. We will, of course, have these slides and the recording on our website at dominionpayroll.com by close of business today. So if you aren't able to join us for the whole time, or if you missed something, or if you want to send it to a friend, we should have that up by 5 o'clock this afternoon at dominionpayroll.com, and you click on the green bar at the top that mentions COVID-19. All right, we still have a few people joining us, but I'll go ahead and remind everybody of some housekeeping things. We will take your questions in the Q&A section of the screen, not the chat. If you could avoid the chat, that would be great. Q&A allows us to record your questions and save them for posterity. We are going to do our very best to answer your questions today. There's still a lot that we don't know. Still waiting for guidance from IRS and Treasury and the Department of Labor. So, I sound like a broken record, but we're back in this place again where we've got a new bill that's been signed, but we don't have all the answers. So we're going to do our best to tell you what we know today, answer what questions that we can, and then we'll go from there. So again, if you have a question, you don't have to wait until the end. You can go ahead and put it in the Q&A section of your screen, and we will do our best to answer them. We are a two-person team today. It's myself, Leslie Bruno, and Tracy Clark. Hi, Tracy.
Hi, Leslie.
I know you have been very busy, my friend. We're so happy you could take the time to download what you know today to our clients and friends here on the call.
Definitely.
So let's get started. I know it's been kind of a weird road getting this to be signed into actual legislation. But 2020 is, it wouldn't be like this year to not go out with a bang. So
that's right.
Right? I mean, right to the bitter ends. We've got so tell us what we know, and then we'll take some questions.
Okay. So the second stimulus payment, as probably everyone knows, it was supposed to be $600. It still is $600 per individual. I know Trump tried to get that $2,000 pushed through, and of course it passed the House, but the Senate said no. So at the present time, the $600 is the cap for each individual, and that's for people who have earned less than $75,000. And then if you go higher than that threshold, the stimulus payment is reduced by $5 for every $100 of adjusted gross income. And I heard on the news this morning that some people could have gotten it as early as last night. I didn't check my bank account, so I can't attest to being one of those people, but it is possible that some people already got their stimulus.
Wow.
It does leave out those individuals that are kind of in the middle. So you're going to get $600 for any dependents that are age 16 and under. But if you have dependents that are, 17 through college age, they're the limbo land, and you're not getting anything for them. And I feel bad for that, because you're still paying a lot of money for those kids if they're in college, or, 17-year-olds are still in your home. They are a dependent. So
yeah, that's a strange cutoff.
Yeah, I don't know how they arrived at that, but at any rate, that was what they did. So that's the second stimulus payment. Okay, new PPP loans and rules. So you definitely want to take a look at this, because there's a lot of new things that have been added to the list that you can claim for forgiveness on your with your funds. So there were things like if you used the money for PPE equipment, excuse me, they also are allowing you to claim fees for payroll processing, like us. So you can include that now for the PPP forgiveness. So basically what they did was they put an additional 285 billion into the program. And if you remember, at the end of the program in the summer, there was still like 139 billion. I was surprised that they pretty much doubled that amount when they brought it back again. But you'll be able to qualify for a second round of loans. Now, they did make it a little stricter. So they have more flexible rules for forgiveness, but they have stricter rules for getting the second loan. So they went from 500 employees down to 300 employees for the threshold. They also did put some caveats in there for businesses who have under 10 employees. So there's been money set aside for those very, very small businesses. They have to have experienced a 25% drop in gross receipts during the first, second, or third quarter in 2020 relative to that same quarter in 2019. And someone did ask me if it was going to be exact quarters or could they pick any 3 months. It is going to be exact quarters. So you're going to have to, I realized that a lot of people were doing okay January, February, and then the end of first quarter in March is when they started to experience those drastic reduction in gross receipts. But it is going to be based on quarters, so you'll have to do it that way.
But it
There is
can
a
be,
new,
just quick question, Tracy, but just to clarify, it can be first, second, or third quarter. It doesn't have to be all three, right?
right.
Okay.
Well, yes, you have to be able to compare it to 2019
Right.
to be able to get it. The new act caps the PPP loans at $2 million. It was capped at 10 million, but now they're doing it at 2 million. And then I just put on there, the act also sets aside $12 billion specifically for minority owned businesses. Now, I have not read any more than what you see right there. And I don't really have any more insight into exactly how those look backs are going to work. I do know that the bill gave the SBA 10 days to implement the new rules. Now, if we've seen that before, that same like, okay, you have this X amount of days to get the new rules, and then they don't come out. So, we can hold our breath. It should be sometime next week when it would come out, because this was signed on Monday, and that would be their 10 days would be up. And I don't know if that's 10 days calendar days. Is that 10 business days? It just said 10 days to implement new rules. Hopefully at that time, and they do have some experience with this, this is our second loan. They know kind of the pitfalls from the first loan, although, there's a lot of things that are unforeseen. I'm hoping that because they have some experience with this, that they will be able to roll it out faster. But right now, I don't know any more than what you see right there about it.
And Tracy, there are a couple of questions related to this slide. Do you want to go ahead and answer these, or do you want to wait?
Sure.
All right. So Lillian says, does Q4 2020 qualify?
It does. And I did see something specifically on Q4. So yeah, Q4 will definitely qualify as well. And then there was something about like if you were getting a loan and you were looking at Q1, you could go back to all the way back to 2019. You didn't have to look at Q1 of 2020. You could look at Q1 of 2019, which skips a year. And I think for new businesses, there were some caveats in there for brand new businesses. And I am going to look into that because I already had somebody ask me a question if they were a new business, how it would work. And there are some new rules out there for new businesses, and I'll get that together too. And I should say too that we are going to have on our website after this is over, you'll see there's a bunch of new programs that are going to come about. And we're going to have some information on our website that you can access so you can see some examples of some of the things that we're going to talk about in just a minute.
Okay, so on the new business note, Todd says, what about a hotel that opened in 2020 that's having no history for 2019?
Yeah, there's some rules for that too. I don't have those right in front of me, but if you want to send in a question to questions@dominionpayroll.com, I will get that together because I already have another client that I'm answering that question for, and I'll be glad to pass that information on to you.
Okay. Okay. Same question from James. If you weren't open in 2019, how will I be able to qualify?
So yeah, again, just send it to questions@dominionpayroll.com and I'll get that together right after the webinar and get that out to you.
Okay. And Williams asks, what's the definition of gross receipts?
You got me there. I don't know. I don't know what gross. I thought that was I don't know. I got nothing. I'm assuming that's what your bottom line is. See, we need Kevin on here for that.
Yeah. I mean, I would think it would be, everything before expenses, right?
That's what I would think.
Well, William, we'll jot that down, and if we have more to share, we'll let you know. But
it is the total amount of all receipts in cash or property without adjustments for expenses or other deductible items. Okay. So that's exactly what you just said. Yep. Okay. Total gross revenues of a company, regardless of their source.
Okay. Could you please expand on what the rules are for the under 10 employee businesses?
There weren't special rules. It's just that if you were a borrower under 10, that they had set aside, I think it was $10 billion for people who were under 10. So I think if you remember, when you go in and you do your application, it asks you for how many employees you have. And I think that's where they're going to do it. They're going to look at that and see, okay, oh, you only have 8 employees, then you qualify for this other bucket of money. It's not going to be different as far as like what you have to provide. It's just money that's set aside just for those smaller businesses.
Is the employee limit based on a single entity or entities with common ownership?
I believe that it's going to be based on your tax ID number.
What about, does PPP cover employer federal income tax as part of the forgiveness?
No, they never did.
It's an interesting question.
It's kind of, and the reason that they don't allow you to include the federal taxes is because the government doesn't want to pay themselves. That was the whole thing behind that. It was like, they just didn't want to pay themselves.
Right.
That's what they would be doing, basically.
Makes my head.
There's a lot of other things you can do to, find ways to get those dollars back.
Linda asks, quarters are not cumulative, correct? Each quarter in 2020 is compared to that quarter in 2019, correct?
Right. They're not cumulative.
Leslie shares gross receipts is your sales. LaShawanda, hi LaShawanda, says gross receipts is revenue before expense. All right, seems like we have consensus there. Thank you, ladies. William wants to know if you can share that exact verbiage in the chat, Tracy. And if you want to send it to me, I can do that. Or if we can do it, we can send it to you, William, later on via email.
What verbiage about the gross receipts?
Yeah.
Oh, okay.
Ben says, is the assumption that we work with our existing bank or provider of the first round of PPP loans?
No, I didn't see that. I did not see that you had to work with your same lender that you had before, because I know some people didn't have a great experience and might want to try somebody else. I didn't see that.
Okay. Linda says, what would you do to prepare for the new application? Do you have a copy of the latest updated application for the old PPP loan with instructions?
Well, the old one is out there. The problem with that is there's not going to be a place for showing that 25% drop in gross receipts. But other than that, it probably is going to be very similar. And if you remember from the first go round, if you're a client of ours, we have a report. It's called the CARES PPP Oh gosh, I have to look really quick and tell you, but it is a CARES, it's the CARES PPP loan report. Be sure. I looked at it yesterday, but so many PPP things running through my mind. I don't have the exact wording right off the top of my head, but I can look it up.
Okay, but don't we have the applications with instructions on our website too?
Yeah, we do. The applications are out there, and you can always Google that, and just make sure that you pick. If you Google it, make sure you pick the SBA's site and download from there instead of going to a third party. Just get what you need from the SBA themselves. But the report that we have would go along with it, and it just has like it'll have your gross wages and things like that on there. It's called the CARES Paycheck Protection Program Report.
And that's an iSolve for our customers.
Yes, it is.
Okay. Felicity asked, do you only qualify for this round if you received a loan the last round?
No, anyone, if you didn't have to have it before. So if you are eligible to have it, you can go for a second one, but it could be your first one.
Right. Okay, and then Lashwanda asks, I may have missed this, but can we apply for the PPP now or are we waiting?
We have to wait. There's no application out there right now, so we're waiting for that.
Christos asks, are you saying that businesses that opened during the pandemic but have no history in 2019 can apply for these loans?
It looks like it to me. I'll dive into that a little bit more. And if you want, like I said, send a question into questions@dominionpayroll.com. I'll give you all the information I can find on that. But I briefly read over that.
Do we have bank partners that you suggest that we work with?
Don't have that.
I don't.
All the players before are going to be in it again.
Yeah, I don't have. We probably can't maybe ethically recommend bank partners, Lashawanda, but I do know that some folks shared with us some anecdotes about some smaller community banks being a bit more helpful and faster. But again, I don't want to show any favoritism against our friends at the larger banks either. Right. It could be that if you didn't have a good experience with your last lender, maybe ask around to some other business owners. And of course, if you all here on this call listening today want to suggest any lenders, if it comes from you, I'm happy to share it. I just don't think that we should endorse anybody specifically. Okay, Casey says, do we know when we will be able to apply? We do not, Casey. The SBA has 10 days to implement the new rules. That was 10 days from the date of the bill signing. We're not sure if that's calendar days or business days, but we're assuming that will land somewhere next week. And then at that point, maybe we'll know what the time frame is for application.
Yep.
Basically, your PPP loan for round 2 would be the same as round 1. Is that correct?
Yes, it is. That's what I read too. Unless you got a loan over $2 million,
right?
Because it is capped at $2 million. But my understanding is if you can qualify with the new eligibility rules, then it will be roughly the same amount as you received before. I believe it's going to be based on the 2019 values again. So you may just use the same report that that may be a possibility. So.
Okay, Lashawanda, we have 2 recommendations for you from listeners. Ben says he had a good experience with Chase, and Casey says she had a good experience with BB&T Truist. So thank you, Ben and Casey, for those suggestions. If your business is split in half, so you are now 2 different companies, can you still use the 2019 numbers to compare to the 2020 numbers?
Ooh, I don't know. That would be a question for the lender when that comes up. I don't know about that.
We have a couple more suggestions. SunTrust. Jane said she had a good experience with SunTrust, which is a large bank, but she had a long and well-established relationship with them. She says, I would suggest that wherever you bank, you develop a close relationship with a, quote, personal banker. Any business should have that. Thank you, Jane. LaShawanda says thank you. All right. I wonder if we should, well, let's get through Michelle's question and then maybe we can move on.
Yeah.
Can a quarter be defined as 3 consecutive months, or is it set as first quarter, second quarter, third quarter? We had a decrease of more than 25% for 3 consecutive months, March, April, May, but not in specific quarters.
I believe it's going to be specific quarters.
I bet you they're going to get a lot of questions about that.
Yeah, I know they will. But if you think about it, unless you were having an incredible second quarter, then you're going to have a 25, unless you had an incredible second quarter, this year, then you're probably going to be 25% less than your 2019 second quarter.
Right.
Because you had April and May. So there would only be June left in the second quarter.
Right. Well,
Anyway.
we'll see if they add any more information around that, but to our understanding, it's just first, second, and third. And then you said fourth, right? We had a question about fourth quarter.
Yeah, that'll be in there. That'll be in there too. It's just at least one. Businesses must have had a 25% reduction in revenues in at least one quarter in 2020 when you compare it to the 2019.
All right. We still have a lot of questions in the queue. Why don't we go through some more slides? We might answer some of your questions and then we'll return to the queue.
Okay, I'm good with that. All right. PPP borrowers will not lose the income tax deduction that was expected to be available for expenses paid from the PPP loans for items that are normally tax deductible. So originally they had said, well, the PPP loan is not going to be included in income. So if you use these funds for anything that was tax deductible, we're not going to actually make that tax deductible. So it was kind of a double-edged sword, but the new verbiage has made it clear that you will be able to do your deductions just like you always have, regardless if you paid it with PPP loan funds or not. So that was really happy to see that. Okay, PPP and ERC. So a lot of people probably aren't familiar with the ERC, and in our company we usually refer to it as the ERTC, which is called the Employer Retention Credit. And the reason that a lot of people aren't familiar with it is because if you had a PPP loan, you weren't able to get the ERTC credits. But the new law or the new act came forward and said, oh, just kidding, we're going to let everybody claim the ERC for 2020, and that goes all the way back to March 12th of 2020. And you may be wondering, well, what the heck? I don't even know what that is. I'm going to go over it so you will know what it is. And the thing you need to understand, though, is that any payroll costs, W-2 wages, or healthcare costs for which a taxpayer claims an ERC credit are not eligible to be forgiven as part of the PPP process. They just don't want you to do double dipping because they kind of go towards the same things. So while a taxpayer may both claim the ERC and borrow a PPP loan, they cannot do it on the same wages or healthcare costs. And I think my next slide, I'll go into it. Okay, yeah. So not only are they letting you retroactively do the ERC credit, they actually change some rules about it as we go forward. So I'm going to talk about it as it applies to the this year, which ends on 12/31/2020. So these rules are would apply to you if you were going to be retroactive. So the CARES Act created a new refundable payroll tax credit for employers that retained their employees during 2020 despite the impact of COVID-19. That credit was equal to 50% of the first $10,000 of qualified wages paid by an eligible employer during 2020, leading to a maximum credit of $5,000 per employee. So here's how you you qualified for this. Eligible employers were determined on a quarterly basis to include those that were either, number one, partially or fully shut down due to government orders, or you don't have to have both of these things, you just have to have one, or suffered a decline of 50% or more in gross receipts when comparing the 2020 quarter to the same quarter in 2019. So if either one of those apply to you, you are eligible for the ERC credit. So, and then they had some caveats about how many employees you had. So for eligible employers that had more than 100 employees, qualified wages only included amounts paid to employees who did not provide services. So you did paid furloughs, or even if you paid for your employees' health insurance while they were on furlough, that would qualify for this. For eligible employers with 100 or fewer employees, were able to include wages paid to all employees as qualified wages during the applicable quarter. So if you were a restaurant and you had this great reduction in your gross receipts, or you were fully or partially shut down, you could use the wages that you paid to your people as a qualifier for this, and you could get back 50% of those wages up to $5,000. Eligible employers generating a credit as a result of a shutdown are only able to obtain the credit for the wages paid during the period of shutdown. So for instance, if you had to be shut down for a month, then that month is where you can do you can get the credit for the wages. If it's the 50% or more reduction in gross receipts, then that applies to the whole quarter. So it's better if both of these apply to you, both of these reasons apply to you, the better one for you would be to suffer a decline of 50% or more, because you can apply it for a longer period of time. I think I have a little bit more on this. Okay. And then they came out with, okay, now what we're going to do is we're going to change the rules a little bit. We're going to loosen it up a little bit. So as we go forward, so maybe you don't want to apply for the retroactive part, but you want to look at this going forward. This is for the ERTC wages that are paid between 1/1/2021 and 6/30/2021. Now this time it's going to be 70% of qualified wages rather than 50%. So on $10,000, you'd be able to get back $7,000 instead of just the $5,000. So for 2021 qualified wages, the cap is increased from $10,000 of wages per employee per year. So in 2020, it was $10,000 for the whole period. Now they're doing it 10,000 of wages per employee per quarter. It makes it a little bit, more, I don't know, favorable. It definitely makes it more favorable if you can qualify for this. In 2021, any employer with a reduction in gross receipts of 20% rather than the 50% can take advantage of the ERC. And for purposes of calculating the reduction in gross receipts, an employer can use its prior quarter gross receipts to determine eligibility. The ERC originally applied to all employee wages paid by an employer with 100 or fewer employees, while employers with more than 100 could include only wages paid to employees who were not working. Now what they've done is they've increased that threshold from 100 up to 500. So that would be any wages that you pay, if you qualify for this, any wages that you paid to any of your employees, under 500 of them, from the period from January 1, 2021 through June 30th, 2021. So they've really loosened this one up. Qualified wages for purposes of the ERC originally could not exceed the amount an employee would have been paid for working an equivalent number of hours during the 30 days immediately preceding the applicable period. What does that mean? Well, basically that meant that you couldn't give them a bonus. Well, they took that restriction out for 2021, and now you could pay your employees a bonus, and they would be treated as wages in that case. So it's really opened up a lot of avenues to way more people and way more small business owners to take advantage of this. This is something that you should reach out to your CPA or your financial advisor about. We wouldn't have any way to determine if you qualified for this. So if this is something that's kind of, you're thinking, wow, I might fall under this, then you definitely want to reach out to your CPA or financial advisor to get some more information on how you can utilize this. And specifically, if you have a PPP loan and you want to look back and see, okay, well, you know what, I used my loan all up in first quarter, or I used it all up in, not first quarter, second quarter, I used it all up in third quarter, and I could qualify in fourth quarter, or, you know, however you want to work this. You just need to make sure that you don't double dip with those wages, and make sure that you qualify. And then, you know, I would say go for it and try to get these wages covered in these credits. It'll just be a tax credit. It's the Social Security credits, just like FFCRA. Okay, EIDL. So for EIDL, if you remember when you looked at your, well, if you did a PPP loan forgiveness or you've taken a look at the application, you'll see there that it did ask you for the amount of your EIDL loan. And originally what they did was they said, okay, well, if you got an EIDL, not an EIDL loan, excuse me, an EIDL grant. If you got an EIDL grant, we're going to deduct that from the forgivable amount. Well, now they've said, no, we're not doing that anymore. So you can actually, you don't have to repay that amount. So it would be in addition to your PPP. And they also have replenished the EIDL fund. So it's still there. So if you didn't get an EIDL advanced grant, go ahead and apply for that because you're eligible for $1,000 per employee up to $10,000. So my suggestion is if you didn't get that the first go round, now that it's not part of the PPP, I definitely would see if you could qualify for that. They're bringing out a simplified application for loans under 150,000. So borrowers who received less than 150,000 in PPP loans during the first round will now only have to submit a one-page application for forgiveness. I think it's going to be, it's not out yet, but it will be soon. And it probably is very similar to the one that they brought out for loans under 50,000. So it's just going to be a lot of like certification that you didn't do this, didn't do that. The only thing is that all the same rules apply. So if you have a report from us, our report basically fills out the long application for you. Just maintain that. You have to maintain documentation anyway, but if you have that report, go ahead and put it somewhere really safe so that if you were to be audited, you could bring that report out and say, I did everything I was supposed to. I spent the money the way I'm supposed to, and you'll be covered. All right, Leslie, you want to do FFCRA?
Yes, I do want to talk about this. Thank you. You take a breath and some water. Okay, so FFCRA, Families First Coronavirus Response Act, mandatory paid leaves, which were put into place last April, they sunset tomorrow. So as of now, all of your employees, full-time, part-time, seasonal, as long as you have fewer than 500 employees total, are mandated this leave by law for if they're sick or have symptoms or awaiting a test or caring for someone who's sick or are home with children whose school or place of care is closed due to COVID-19. Hopefully this is not new information to you. I hope that you all have heard about this by now, but we do have some clients who've been calling this week as they're trying to wrap up their year-end paperwork and payrolls and tax filings, etc. They realized that they didn't code their, someone took these leaves sometime in 2020 and they didn't code them properly, and so they didn't get the tax credit. So if you have let anybody, or if anyone has taken time off for COVID related reasons, you can get tax credits for that time. You just need to go back and code it properly in the payroll system so that you can track those hours separately. So if you're one of our clients, you can email customer service at dominionpayroll.com. Give them a little bit of grace right now. It's kind of a busy week, but they will get to you. and they can help you set up those codes. As of Saturday, sorry, I've lost track. Friday is January 1st. As of Friday, these leaves are no longer mandatory, so employees are not entitled to them by law. However, you can still opt to provide them and you will get the tax credits. The bill extends them through March 31st, 2021. All the same things apply in terms of employee eligibility, employer size, 500 employees or less. The tax credits are real time, dollar for dollar tax credits. So you actually aren't paying these wages. So it's actually a pretty good deal if you have somebody that who needs to stay home, can't work or can't work remotely. I would go, and my personal opinion is I would go ahead and just extend these leaves to them while you still have the option to get those tax credits now through Friday through March 31st. One caveat though, if an employee has already used all or part of these FFCRA hours in 2020, they only have the balance that's left. So if they've used all of the hours, so for instance, emergency paid sick leave, folks are entitled for up to 80 hours or whatever they would normally work over the course of 2 work weeks. So if someone has already used that emergency paid sick leave all the way through to the last hour, they don't have any more emergency paid sick leave to use in 2021, whether you want to give it to them or not. That said, if they have COVID symptoms, the virus is still here. I would still keep them out of the office if you can. And then they would have to use their own vacation or sick time that they've accrued with you. You could give them unpaid leave of absence. You could work something out. But even though the vaccines are out, the general population is not going to get the vaccine for at least, definitely not first quarter, maybe not even until late second or third quarter, not to be pessimistic, but that's just the reality of things. So I would keep them out of the office if you can. If somebody used part of their 80 hours or whatever they're entitled to over 2 weeks, then they would have the remaining of those hours left to use. So hopefully you've tracked those properly so you would know if they have a bank left over. For EFMLA, that's 12 weeks of leave for someone who needs to be home because their children are at home. That's the only qualifying reason. And that also is a real-time dollar for dollar tax credit. Somebody could have used part of that in 2020 and they are now eligible to use the rest of it in 2021. Of course, it's at your discretion. But again, you can work with them. EFMLA is actually can be taken intermittently. So you can, maybe they have someone to cover childcare Monday, Wednesdays, and Fridays, in which case they would work normal hours. And then Tuesdays and Thursdays, they need to take EFMLA. That's paid at 2/3 their regular rate of pay. There are some daily maxes there. You'll see $511 for emergency paid sick leave, $200 a day for EFMLA. So they would be taking a pay cut, but it would be a way to keep them on the payroll, for you not to have to terminate someone and then hire someone new, and then to generate some good morale there because a lot of these schools are still closed. I know my daughter's school system is closed for the rest of the year. So we are not out of the woods yet, folks. So even though the leaves are no longer mandatory, my opinion is that if you can grant them, go ahead and do it. And so that we can get through this pandemic even more quickly than we are, which doesn't seem like it's quick, but let's not draw it out any longer.
It's really important that people know how many hours they have already granted so that they don't go over. And our system does track the hours that you've paid in 2020, but we don't have any mechanism in place as of today to roll the unused hours over into 2021. So at this point, it's important that you are aware of how many hours your employees have used so that you don't over grant hours in 2021.
Yeah, I guess they could just could they pull a report out of our system if they're our client that just shows what's been used for somebody, or is that
We
not
we
possible?
don't have a canned report. A report can be written
Okay.
that would tell them, but somebody will have to do, unless, I mean, some of our clients are very savvy and can write their own reports to do that. The hours are in there. It's just that we don't have a canned report that says, oh, here, Jane took 72 and Bob took 15. So we don't have that canned report in there. So a report either has to be written by them or by us to let them know.
Now, Sophie has shared with us that they could use the earnings report, or excuse me, the earnings export.
And does it break it down by employee? I don't know. I haven't looked at that.
I don't know. We don't have
I'll
Angie
look into
on
that.
Oh, Sophie says yes.
Okay.
That's
Well,
great. So if
that
you're,
might be very helpful to everyone,
yeah, excellent. Thanks,
including us.
Sophie. We don't have Angie with us today either, so we don't like flying blind here.
That's right.
Okay, so the earnings export.
Yep. I'll look into that afterwards. Thank you so much for that.
And then Sean says, I wrote that report yesterday. It was super easy and quick.
Oh, good. Yeah. Because
Love
we
our,
talked about it, Laura and I talked about it ahead of time because I was writing one to figure out what the healthcare credit would be for a client, and Laura wrote up some instructions to be able to do it.
great.
Yep. Okay.
Love it.
Wonderful.
Erica says, if an employee has a balance of ESIC or EFMLA, are you saying that the system will no longer show that balance in the time off balances?
Right. We don't have a way of rolling it over once we leave 2020.
Yeah, we didn't know it was going to go into 2021.
Exactly. We just found out Monday.
Yeah, Erica, it's, as with all of this stuff, the technology isn't always up to date with the legislation.
Well, I don't think that I think sometimes when they make these rules, they think it's, you can just snap your fingers and write up some kind of report that will do these things. Never mind that you've brought forth like 5 to 10 different caveats in different programs. So I don't know.
Yeah.
I guess they think people are magicians.
Yeah, exactly. Just ask anyone at the SBA right now, or an unemployment office.
I know.
Okay, so just
Right.
to review, if you're a Dominion payroll customer, you can go in and pull what's called the earnings export. Sounds like it's easy and quick, and you can look at individual employees to see if they have been paid under FFCRA and see and track those or add up those hours and see if
Or
they
you
have
can write a report and it'll just show you just those hours.
right.
All
Okay,
right.
so I think
Good.
that's it for FFCRA for now. And this one is unemployment. It's obviously a big topic. From our understanding now, it's going to be an additional $300 per week for all workers receiving unemployment benefits through March 14th and possibly longer. We'll see what happens. It also extends that pandemic unemployment assistance program, which expands coverage for independent contractors, self-employed individuals, and gig workers. Again, unemployment is a state-by-state program. So even though the Congress says this $300 will be slated to cover the weeks starting from December 26, 2020 and ending on or before March 14, 2021, we're awaiting guidance from labor. And we also, the individual states are the ones that are going to have to roll this out in terms of updating their systems and their websites. So I haven't connected with our friends here in Virginia yet at the VEC. I'm sure they're starting to spring into action around this. But I guess if someone needs to apply, just to go ahead and get their name in, get their claim in, and see what happens.
Mm-hmm. Yep. Okay. Let me see if we have anything else. Ooh, that's
Okay.
it, Cal.
Erica says, can you repeat the report that others pulled to get FFCRA leave used for each employee? That would be it's the earnings export.
I don't know. I haven't looked at it myself. But you can also put in a ticket for a report to get the FFCRA hours out.
Okay, so we have 28 questions in the queue. So we're just going to plow through these and do
Okay.
our best. And if we run out of time, we will ask you all to submit them to questions@dominion.payroll.com. But let's see how many we can get through.
Okay.
All right. Are EDI loans or idle loans available for businesses that have no history in 2019 but opened in 2020?
I don't know, but you know what? I would go ahead and apply. Let the lender be the one to tell you no.
Will we be using the 8-week or 24-week scenario?
Yes, so the covered period is going to be anywhere, it's up to you. It will be anywhere between 8 and 24 weeks. So it's still going to be that 2.5. The loan will be based on 2.5 months basically of your 2019 wages, but you can decide between 8 and 24 weeks. Like when I say between, you can do 8, 9, 10, 11, 12, all the way up to 24 weeks as far as your loan length.
Leslie asks, will we qualify for more money than PPP number 1 if we are now able to establish that we indeed expanded more than our first loan or expended more than our first loan?
No, it's still going to be based on the same numbers as number one. You know, unless you left something out, I would guess that it's going to be about the same thing.
Do you have recommendations or guidance for applying for a second loan before receiving forgiveness on the first? I would imagine a lot of people are in that boat right now, right?
Yes. From what I understand, they are, you know, tried to read a lot about this because I was like, okay, what happens to people who haven't applied for forgiveness? Because that's a lot of people. I think that you're going to have to show that you have spent the money from the first one. You're going to have some kind of documentation showing that you've spent the first one. But I don't know that, I mean, because the rules aren't out yet. So
Given the additional costs being covered, the second loan could be bigger than the first, right?
no, I don't. From everything I've read, it says it should be right at what the first one was because it's going on the same values.
Is it true that you can use the PPP loan funds for payroll, rent, and utilities? How do you apply for that amount? When I applied for the first round, I was only able to submit information for payroll expenses and not rent, utilities, etc.
Right. So that's how they do it. They base the loan on payroll amounts, but they allow you to use the funds on expenses other than payroll, but they don't base it on those other expenses. You have to spend 60% on payroll, just like before.
Right, so the application is not concerned with rent and utilities, but the forgiveness application is.
Right, exactly. So you just have to meet that threshold of at least 60% on payroll.
It could be 100% on payroll, but it has to just be at least 60%.
Yep. And then the other 40% or less on those other qualifying expenses.
Okay, Alexander, we're getting to your questions finally. Do new eligibility requirements apply to first-time applicants?
Yes, the same as before.
Lisa says forgiveness for the first loan would need to be completed before applying for the second one, correct?
That's not what I'm reading. I'm reading that you could have received forgiveness, but basically all I've seen so far is that you have to be able to show that you've spent the money for the first PPP. I really think we need to wait on SBA to expand on that. I have not seen that you have to have received forgiveness or be in, or either be in the forgiveness process. I've not seen that yet. So I don't want to say.
I can't imagine they would be able to do that, but.
Well, they've got to have some way to know that you're just not squirreling the money away, that you've done something with it.
True. Okay, so more information on that soon, hopefully. Sean says, is e-sick time and tracking ending on the agenda today? If so, is there a specific way we can pay out e-sick time on payroll now that it won't be tracked in iSolved anymore? I don't think we're saying that it's not
Yeah,
tracked.
it's still, yeah, it'll be tracked as far as like you would, when you go in 2021, it's still going to be there. All the earnings codes will still be there. All the mechanism for paying employees for those hours and getting the credits, that's all there. And it will track. The problem is that it doesn't know what you've already used. That's where we are right now, is that today, could be different tomorrow, but today our system doesn't have a way of rolling over the unused amounts. Not the unused amounts. That makes it sound like that you don't have any left. It doesn't have a way of saying, okay, Bob already used 16 hours, so he has 64 left. It doesn't know how much is left. That's the problem. But it still works and it's still going to track. So if you went in and said, okay, Bob used 30 hours, it's going to pay him 30 hours. It's going to credit you with those 30 hours. It just doesn't know, oh, now he's used up 46 hours. That's what it doesn't know today.
It would allow you to pay him up. It would allow you to pay him forever. There's
yes. Well, up to 80. It's going to reset the cap is what it's going to do to that 80 hours. And that's the problem.
As of Friday.
Right. Yeah. Right now it's working fine.
Yeah.
And like I said, it's still going to work fine. The mechanism is still there. That's not the issue at all. It's just that it doesn't know what you've already used, what your employee has already used. So you'll be fine.
Okay. Sean, hopefully we answered your question. Brittany asked, what if we stayed open and retained employees?
Oh, I don't know what that means.
I guess she's saying, does she qualify for a PPP loan?
If you stayed open and I'm not sure. I need some clarification on that because I don't really understand what the question is. Is that on ERC? I don't know.
No, Brittany, let us know more and we'll try and answer. Leslie says, if we establish more payroll related expense than our first PPP loan and we qualify for ERC, how to allocate specific expenses between the two and how to apply for the ERC credit?
Contact your CPA or your financial advisor. Because I don't know how you're going to go about doing that. That's going to be, that's outside of our realm.
To qualify for the retroactive ERC, do you need to have retained all employees for the full 2020 year or just for the quarters you are applying for?
Was that for ERC? Is that what that said?
Yes, to qualify for the retroactive ERC.
ERC doesn't have anything to do with the number of employees, except for where they try to figure out if you're over 100 or under 100. That's the only place.
Okay. Casey says, do we apply for EIDL through our bank like the PPP?
Yes. You know what? EIDL may come straight through the SBA.
Yeah, I thought it was straight through.
Yeah, I think it is. I think it's straight through the SBA.
So they probably don't have it up and running just yet, but
well, no, for EIDL, yeah, that EIDL is going.
Right, because that never came down.
Right. They just replenished it. So you should be good to go for that one.
Okay. Does the EIDL grant count for only W-2 employees, or can K-1 owners also qualify and count towards the $10,000?
I'm not sure about that. I would again check with SBA and see, because I think you can download like the instructions and stuff.
Leslie says, I think EIDL is a loan, not a grant.
It is a grant. Well, they have an EIDL loan, but this is the EIDL, I think they call it the advance or something. I'll look it up.
Because you don't have to pay it back.
Grant. Yeah, you don't pay it back. Let's see. Yeah, they're calling it the idle grant. Granting advances. Idle advance program provided a $1,000 grant per employee. So it's definitely the idle grant.
Okay. For second round PPP, is the requirement for retaining the same number of employees in place? And if yes, what are you just comparing the number of employees in the quarter you see the reduction in gross income? Is it for the year comparing 2020 to 2021?
Wait, I didn't understand that.
Let's see. Retain the same number of employees in place. And if yes, what are you just comparing the number of employees in the quarter you see? Can you see that question, Tracy?
Put it down.
It's Spencer.
Okay. For second round PPP, is the requirement for retaining the same number of employees in place? And if yes, what are you comparing the number of employees in the quarter you see the reduction in gross income? I don't think, let's see. So normally what they do is they would not, I'm guessing the way it's going to go again is they're going to have those reference periods, and they're going to use those reference periods like they did before. So I don't think that the reduction in gross receipts is going to have anything to do with FTE count.
Is FFCRA for non-exempt full-time employees? Yes, it's for all employees, whether they're exempt, non-exempt, full-time, part-time, or seasonal. What are the specifics to include for insurance for the loan?
Oh, I mean, for forgiveness for PPP, I did see that that it was going to include disability and life.
Okay.
In addition to like the regular stuff, vision, dental, and all that.
Anonymous asks, if we do not grant EFMLA, regular FMLA would not apply to school closure, correct? No, so regular FMLA, which is 12 weeks of unpaid job protected leave, technically that FMLA is for when someone is ill or needs to be home for another reason related to like a disability. Yeah, you could use it for school closure. It doesn't really fit nicely into that category though. I mean, I would like for you to be able to use it. I mean, you can draw up a similar agreement or float a policy out there that says we will offer you unpaid job protected leave and not call it FMLA but it still would serve the same purpose. That's what I would do. I would come up with some sort of policy to cover you at least for this first quarter to make it clear to employees who may qualify for EFMLA what you all are willing to offer. You know, maybe they can use up their PTO, and then if they use that up and they need more, they can take unpaid leave, and you promise that their job will be there when, you know, you're not going to fire them, or their job will be there when they come back. And put all that in writing, have everybody sign it. And if they do take time off and they don't take the whole 12 weeks, or maybe they take intermittent time, you know, work out a schedule, put that in writing, everybody sign it, and then check in regularly to make sure things are working. Okay. Next, for the loan is health insurance, dental insurance, LTD insurance, and group term life insurance that are included. What about workers' comp?
No, workers' comp is still not included.
So everything else on that list is?
Yep.
Including LTD?
Life insurance? Yep. Yeah, disability. This disability was too. I saw that the other day.
Okay.
They've included all that.
Amy says, can you please go ahead and create a canned report of the FFCRA hours for your clients? That would be very helpful to all of us.
I can look into that. I don't have anything to do with that side of the payroll, but I can ask about it. And I did look at this earnings export, and it's all there. So it's done by employee, and it's super easy to look at. So if you're just looking for a canned report that has all of that in there, you can see the hours and the dollars. So I appreciate
Thank
whoever
you,
passed that
Sophie.
on to us. Yeah, that was really helpful.
Thank you, Sophie. It takes a village.
Yeah, that's so true. Lordy.
Yeah, our system is a big beast. So anytime we get helpful hints from our clients,
Yeah, for
we
sure.
welcome them. Okay. Thank you, Amy. We will look into it. Linda says, can you review again the qualifications for the 2020 ERC if you received a PPP loan?
The qualifications aren't different. So you still have to have a reduction in gross receipts of 50% or more. Looking, and you do a look back at 2019. So you look at, if you're talking about second quarter in 2020, you have to look back at second quarter of 2019, or if you were fully or partially shut down. So those were the two qualifiers for it. The only thing that you have to be sure is that the wages that you use, the qualifying wages that you use for the ERC can't be the same wages that you use to qualify for PPP loan forgiveness.
Okay, Stacy says, so the FFCRA is no longer mandatory after 12/31/2020 for all employers. It will be voluntary. That's correct, Stacy. It's no longer mandatory in the sense that you will not be subject to some sort of wage and hour claim or lawsuit if you don't grant it. However, in my opinion, I think you should do it if you can, if it won't interrupt business because you're not paying for those wages and the virus is still around.
And you get immediate tax credit.
Yep.
I mean, if you're our client, you get it that day as soon as you process it.
Yeah, you're actually
or you can get an advance. You can use Form 7200 and get an advance if you have any overage.
Yeah, and you're actually saving money in a way, in a bizarro way. And you're keeping that employee away from your other employees, which is the whole point. Sarah says, will there be a new poster we will need to post in our stores for FFCRA? That's a really great question. I haven't seen one.
No.
She's referring to what's called a model notice, or a poster that everyone was by law supposed to make available to their employees this year. I guess as of December 31st, that poster is no longer valid because it talks about the leaves being mandatory. So if we see another one, we will post it on our website. You can still use that poster. It's a good way to lay out the eligibility rules for the leaves. You just might need to float a note to your employees saying that it's now no longer, they're not now federally mandated, but here's what your new policy is, which will be, you guys will grant the leaves if someone's eligible, or you won't grant the leaves, or you'll take it on a case-by-case basis. I think it would be helpful to clarify for your employees in the early part of the year if you can. Just, because again, the virus is still here. So you're still going to you may have people who have symptoms or awaiting a test, and you're just, instead of scrambling in the moment, you might as well just go ahead and figure out what your approach will be. Sue says the application was for 8 weeks of payroll. The forgiveness was up to 24 weeks. Will the application be the same? I guess she's referring to this new round.
So, yes, I think it's going to show you that if you look at the application that they came out with, I think it was after June 5th, it had the 24 weeks on there. I think what you're going to see is that same situation for the covered period is up to 24 weeks, but it's still going to be paid based on basically 2.5 twelfths of your 2019 payroll.
Okay, and Brittany says, I'm sorry if this was asked. Are we waiting on guidance on how to apply for forgiveness, or do we need to reach out to our bank?
No, forgiveness is already out there. We're not waiting on that at all. What we're waiting on is application for round 2 for a loan.
Yeah, and Brittany, if you need a forgiveness application, they are on our website on the COVID-19 page. They're pretty close to the top. They're not the topmost links, but they're pretty close up there. And there's an easy one and then the long form one. Okay, Alexander says, did I hear you say that you will be providing information on PPP for new businesses in 2020?
So I am. However, while Leslie's been talking about FFCRA and stuff, I was actually like doing some stuff in the background. I am still only seeing that you must have been in operation by February 15th, 2020 to be eligible, which I know this is, I'm sorry about that. I'm still looking to see if there's anything else. I don't see anything other than that February 15th. I felt like that they were going to change that, but for right now, that's, let's see, new businesses that were not in business for one period. Yeah, they're still using that February 15th for right now. And they may change that because of this coming out much later. But right now, that's all I can see.
And Tracy, we don't have any idea of what the application deadline will be, right?
Oh, no.
Okay.
No, none of that is out there. You know, it's just a lot of things are up in the air, just like it was last time. It's just a lot of things up in the air.
Yeah.
We're just waiting on SBA right now.
Okay.
And if you think about it, I really feel for those people because they're in the middle of all of this PPP loan forgiveness from the first round, and then they've been thrown a curveball.
Right. Yeah, they're not going to have a real happy holiday this weekend for sure.
And just trying to like figure out how this next round is going to look, and you know what changes they have to make to the application and the instructions, and what kind of frequently asked questions they're going to get. It'll be crazy.
Okay. Todd says, if we are claiming ERC for any wages, what do we need to do in the payroll system?
You have to let us know that you will be participating in the ERC and what time period that you're going to be participating in that. And you'll need to figure that out with your CPA to let us know.
So
that requires a lot of, if you're going to do it retro, that requires, you know, some amending of the tax returns. So we have to go back and amend the 941s.
So he would start with his CPA and then let customer service at dominionpayroll.com know what their plan is?
Yes, and that gets assigned to a special person within our company on doing those ERC credits.
Okay. Paige says, if I am able to ask a question about the tax deferral, does this still need to be paid back by 4/30/2021 by the employee? So this is the payroll tax deferral that Trump authorized by executive memorandum back in August.
So the payroll tax deferral, if I remember correctly, is I think they now can pay it back over the whole year. I think that changed.
I just had a little bit of PTSD when she brought that up. That was an interesting time.
I want to say I think it's through the end of the year. Pay back the taxes very quickly, because it was having to be paid back by April of 2021. But for some reason it's ringing a bell that they changed that, and that they gave them, let me see if I can find it really quickly. I'm sorry. I wish I was up to date on every single thing.
Well, why not? I can take the next question while you're researching.
Okay.
Okay, Stacy says the only reason for EFMLA is school closure, correct? That's correct. not because you are away from work for more than 80 hours due to your own COVID diagnosis. Sounds like you've got somebody who's self-quarantining, Stacy. So let me back up a little bit. So yes, EFMLA is only for the childcare reason, and that's 12 weeks, and that is paid at 2/3 rate of pay, the first 2 weeks being unpaid. It can be taken intermittently. And school closure is the only reason, and you need to shake loose some sort of documentation from the employee at some point, whether it's an email from the school district or daycare or what have you. Now, if somebody is sick and they take they only are eligible for emergency paid sick leave, which also includes up to 80 hours for the childcare reason. But the other 5 reasons are directly related to symptoms, awaiting test results, quarantining. If you have somebody who's opting to stay home because they think they were exposed or they have symptoms, that's tricky. I would ask for some sort of doctor's note. Self-diagnosing is really not best practice for this. I mean, I don't know that the IRS is ever going to come audit you for those tax credits. But I also see what you might be getting at here, that some employees might take advantage, thereby shooting themselves in the foot, as well as other employees who may really need the 80 hours and aren't messing around. So and now we're entering this zone where if it's discretionary for you guys to grant these things, to grant these leaves, it's going to be even trickier. It's almost cleaner if they're mandatory, right? Because then you have to. But now you're going to get into this territory where you might be perceived as playing favorites or not applying the same rules to everybody. So I wish they had made these mandatory through March, because it almost would be easier for employers to make decisions. That said, the guidance that we've been giving people is that if they say to you, I can't come into the office and interact with people because I have this following reason, then they need to show some sort of due diligence. Either they're waiting a test or they're going to wait out the symptoms and they have a doctor's note. That's best practice. You can take their word for it. But if you do that, you're going to have to do that with everybody. So I know it's a little tricky. I'm happy to walk you through that. If you have a specific situation, you can email it to questions@dominionpayroll.com. All right, hopefully I answered that. Real quick, I didn't mention with regular FMLA, which is again the classic version, unpaid, 12 weeks, job protected. If someone does get COVID and they're like a long hauler, so they need more than 2 weeks because they truly are sick, they can take FMLA. They wouldn't get paid for it. If you have a short-term disability policy, they could certainly, that could certainly kick in, and they could run concurrently. So short-term disability would run at the same time as FMLA, and that would protect their job and pay them, and then you wouldn't be paying them. They'd be paid through your STD insurance. That's happening a lot right now. And, that's something that is an option for folks who get sick and need more than the 2 weeks to recover. It wouldn't be an option for someone who has a child at home due to COVID. All right, Tracy, you ready to get back to Paige, or you need some more time?
I can see like some military stuff where it's gone all the way through. I'm just trying to, I'm pretty sure that it's over the whole year, but I can't say for 100%, but I really feel like it is. Oh gosh, let me see. Trump payroll tax deferral creates predicament for Congress. Oh, hold on. I know there was longer payback period. I know it was. Let me see if I can, there's, the problem is that when you Google something, if a lot of old information will come back, and so you have to look at, everything.
Can't they fix that?
I wish they would.
Well,
I really do.
You can sort it by date, right?
I mean, it is in here by date, but it's still like,
Right.
So they're
Might be outdated. We might have to research this a little bit more. Well, there's another question about FFCRA, so I can field that for David. For the e-sick pay or emergency paid sick leave, does the employee have to be paid on the week they were out sick, or can we pay them retroactively? We had an instance where an employee was out sick for COVID testing, but accepted another job and never returned to work. Would it be possible to pay them after they have returned to work? Oh, I don't know. I was going to say yes, but then you threw that curveball in terms of another job. You definitely could have, if they had stayed on your salary payroll, you could have retroactively taken the tax credits. But now I'm not really sure. Actually, I've not had that question before. I might have to look into that. I don't know how many hours it is you're talking about, but I'm assuming you paid him with regular pay and you want to get the tax credit. I'm going to make a note, and David, if you could do me a favor, if you could put that to questions@dominionpayroll.com, that'll create a ticket for it and we can look into it. Sorry, I don't know that off the top of my head.
So much to know.
Yeah, that's a new one for me. For the new loan, what insurance is included in the loan amount? Please specify the insurance types.
Medical, dental, vision, disability, and life insurance. And if you have like a HSA or FSA that you contribute to, not employees, but employers.
So not 401k.
Yeah, 401k, but that's a benefit. Didn't they ask about?
Oh, they did. Sorry. Yeah, sorry.
Don't be throwing that out there.
I'm sorry. Insurance. Goodness gracious. Okay. Are you able to send a link for the prior PPP loan applications and instructions, because the application instructions have changed over time? So I have put in the chat earlier a link to our COVID-19 page, which has the 2 apps from last summer and instructions. What did I do with that? I put it in the chat around 11:25 a.m. No, sorry, that's the SBA FAQ. I thought I did. Sorry. Anyway, I'll repost it. Okay, question.
Okay, I found it.
Oh, yeah. Okay. Good.
Okay. Under the legislation, let's see. The period for withholding the deferred taxes is extended. Yeah, the applicable taxes have to be repaid by December 31st, 2021. Penalties and interest on the deferred unpaid tax liability will begin to accrue to the employer on January 1, 2022. Let's see. Legislation extends the period of time for an employer has to withhold and pay certain payroll taxes deferred. The date. Yes, so it looks like you have until December 31st, 2021 to get it. There you go. Whew.
Goodness, I didn't even hear the answer to that question because I was doing something else.
You can spread the withholding of the deferred 2020 payroll taxes over 12 months rather than just the 4.
Got
so
it.
that the impact on your employees' paychecks will be smaller.
Got it. Awesome. Thank you, Tracy. Okay, so Anonymous, I'm realizing you might be asking about a link for prior PPP loan applications and instructions. I read that as loan forgiveness applications and instructions. So the link I just put in the chat is to our COVID page, which has the forgiveness applications at the top. You're looking for the actual loan applications, which I don't have right at my fingertips. But I think you can probably Google them.
Yeah, I just did. Here it is. Copy. You put it in the chat.
Are the apps still up?
Oh yeah, they just changed it effective November 30th, 2020. About that.
Okay.
So
All right.
here's the application. Just download the PDF there.
Awesome.
That's
Thanks.
the latest one that I see.
Why would they update it? Wasn't the deadline in August?
I don't know.
Okay. Creating more work for themselves?
Yes, you are correct. It was in August. But if you go to it, if you hit that one, it says that it was revised on June 24th, but that is the latest version. I think because they changed the expiration date on it to 12/31. I think that's why.
Oh, okay.
But it doesn't ask you like about your, I don't think it asks you anything about like gross receipts or anything.
Okay. All right. Alexander has a couple questions that keep getting bumped to the bottom, so I'm going to read those. Do the new eligibility requirements apply to first-time applicants as well? Seems like I read somewhere new applicants could meet previous standards.
I think it's going to be the same as it was.
Okay. For the first-time loan, do you still need to demonstrate the 25% loss requirement?
I believe so, because it's that ship has sailed. The old version has sailed.
Okay, question 38 of the FAQ from SBA deals with business purchase, changed ownership, but were in operation before the February 15th date. I guess the 2019 numbers from the prior business would be used in establishing PPP numbers.
I think so. I think we had some clients that had to do that.
Okay. Could you advise us to apply for both, or excuse me, would you advise us to apply for both PPP and EIDL, or just one or the other? Is it possible to be approved for forgiveness for both?
Yes. Yes, and yes.
Because I remember we talked at length about that way back in like April.
Yes,
Because
you should apply for
EIDL,
both.
because at that time, EIDL would count against your forgiveness, right?
We didn't know that at the time, but it turned out it was, but now it's not.
No, it's not. So now it's just two separate pots of money that don't interact.
Right.
Okay. Leslie says, I think the payroll tax deferral is paid half on December 31st, 2021 and half on December 31st, 2022.
That's the employer tax deferral. The employee tax deferral has to be repaid by December 31st, 2021. It's very confusing, but I believe the old question was about the employee because, and the reason I think that is because she asked me about it being repaid in April or was that extended, because the employee tax deferral had to be repaid these first 4 months, but now they've made it so that you can stretch it out over the 12. But Leslie's talking about the employer payroll tax deferral.
If you included workers' compensation, a small amount, in the first PPP application, would you delete that amount on the second application?
Yes.
Okay, Lillian says, to be clear, you do have to pay back EIDL with interest. We have a loan through them. I think what the panelists are talking about is a small advance. Ours was $10,000 that is forgiven. And it was clear in our loan agreement we couldn't double dip the funds. So EIDL had to be used for other things, either payroll during a different period than PPP or non-payroll expenses.
Correct. Yeah, it's an EIDL grant or advance, not an EIDL loan.
But she's saying that it's only hold on. The $10,000. I'm trying to think back to April now, because it was
the $10,000 is the grant. the idle loan could be for some other amount.
Okay. So that we're saying that $10,000 doesn't have to be paid back.
Right, if you get the idle grant or the idle advance, that does not have to be paid back.
Now, does the current idle need to be used for things other than payroll, like the previous idle?
Yes, you can't pay the same thing with two different buckets. You can't get credit, I guess. That's the best way to say it.
Yeah. Okay, thank you, Lillian. Anonymous says, do we know if you were not given PPP the first time, would you be given priority?
I have not heard that.
Okay. That's the last of the questions.
Okay. Excellent.
Thanks, everybody. We are happy you could join us today. We will try to answer your questions. If you have any further, send them to questions@dominionpayroll.com, and we'll do our very best to answer those. As a reminder, we are closed on Friday, and Tracy's going on vacation next week. So
woohoo!
Have a great time, Tracy. We won't need you at all around here.
I'll be worried to death about it.
Well, I hope not. I hope not. We'll get some backup. In any case, thank you so much, everybody, and we will see you next week. We'll be back on Tuesday with an additional webinar, and then about stimulus, and then Wednesday we'll be talking about vaccines. So don't miss it. Happy New Year.
Bye.